Now, somewhere along the way, we passed the inflation-adjusted all-time high price for gold set way back in 1980. Single-day panic event, moonshot, like only the crazy people talk about. This time, though, I guess it's normal. In 1980, gold shot the moon. It ran 2,261% from 1970 to the $850 high in 1980. So 23x run. Then that price fell and it took decades to get back to. But look at this chart and you will see that in real terms, not just nominal, we are ahead of that 1980 spike. $850 adjusted for inflation would be $3,325 today. As I'm recording this, gold is trading about $10 higher than that, so for a few reasons, the two cases are being compared. Now, there's some really interesting ideas to pull from that, but there are also some extreme differences, and we need to take a look at both. But before we do, let's get a quick shout out to channel sponsor Summit Metals. You've heard me say they're a great place to find gold and silver. That's all true. They've just made it easier by rolling out some improvements to their website. Be sure to check them out at summitmetals.com. So let's start with the prior macro factors from 1980. That price spike was panic driven. It was the end result of a perfect storm and a blow off top. Now, I'm sure some of us are out here thinking, well, today's gold price is panic driven too, but really the two cases couldn't be more different. We had the dollar severed from gold in 1971, ending Bretton Woods. We had the oil shocks in 1973 and 1979, with oil prices quadrupling in 1974, doubling in 1979. So gas rationing, heating oil shortages, inflation hit double digits. We're worried about 3 to 4% today. So stagflation, recession, geopolitical instability, some of these things sound similar, but it was a different time. It wasn't just gold. Commodities across the board were running. Interest rates were climbing toward 20%. The dollar was losing credibility. Investors were scrambling into really anything tangible. And probably the most important bit of context is that gold was just about to drop more than 60% over the next few years. And it took nearly 3 decades to reclaim that $850 nominal level. Now, fast forward to today. A long-term chart is going to make it look like we're seeing a similar price jump, but this is a linear chart. It's going to make an $820 run like we saw in the 80s. Look small compared to a $1,700 run that we just saw. But in reality here, the run to overtake that 1980 high in real terms has been pretty quiet. It didn't take a moonshot to get us here. This has really been a steady climb since the early 2000s and then a doubling in the last 5 years. Now, one thing I want to point out here is that we aren't dealing with a scarcity issue in the gold market. Gold is still scarce, but not more so. The above ground supply has doubled since 1980, going from around 3.2 billion ounces to 6.4 billion ounces today, but the world population has nearly doubled as well. So that means only a slight increase in gold per person, not that gold holdings are evenly distributed, but total gold above ground amounts to less than 1 ounce of gold per person on Earth. So if it isn't additional scarcity driving the gold price, which just happens to be Bitcoin's whole model, why has the price of gold jumped so much? Well, obvious reasons here. Central bank buying, we've got record levels 3 years running now. You have steady demand from investors and industry. And then, of course, currencies are just continuing to lose purchasing power over time. Just look at inflation alone. A dollar today is worth a quarter what it was worth in 1980, and 1/9 what it was worth in 1970. But we really have to look at the current price run relative to what we've seen in the past. As far as these gains in gold price go, the current rally for gold seems impressive. But like I mentioned, it's been a steady climb compared to what we've seen in the past. The nominal price of gold has doubled in 5 years, so 2x. Seems big. Just sticking to nominal price gains for a minute, 1970 to 1980 was 2,261%. That's a 23x. 1990 to 2011 was 6.5x, so we're in the midst of a big rally, but not the kind of move that stands out from the past. Today's $3,350 price is normalized, and I'm going to show you what I mean by that. Not only does the current rally not stand out historically, there was no one-day spike to get us here. This is a chart showing the 1980 spike. So the past inflation-adjusted all-time high was a one-day event. You might not remember that. You might not remember the gold charts from the time, but I bet you've heard of the Iran hostage crisis and the Soviet invasion of Afghanistan. Both of those events helped gold get there. So why are we going over all of this? Well, we want to get an idea of whether gold price continues to climb, whether that 20x moonshot prediction we see floating around makes any sense, or whether we could see some kind of blow-off top, sending gold price down 60% to a price that takes 3 decades to reclaim. And to do that, we need to know what's actually driving this rally, how it's different than what we've seen in the past. And I'm sure at least a few of us were pretty oblivious to what was happening in the 80s at the time. You know, my memory of 1980s TV wasn't the news, it was the Dukes of Hazzard. And I don't remember Bo and Luke waiting in line to fill up the General Lee. Okay, so how it's different. Starting with a big one, central bank buying. We've seen record buying for 3 years straight now, over 1,000 tons of gold a year. In the 70s and in the 80s, central banks were actually net sellers, and that didn't change until the late 2000s. And what we're seeing now is not some kind of speculative buying, it's actual governments making intentional reallocations of their reserve assets. They're diversifying out of dollars and into gold. Then next you have investor demand, so retail investors, physical and ETF holdings. Physical holdings in the East have been strong for a long time, but in the West, it's been climbing again since 2020. A lot of that was kicked off, of course, by the 2020 pandemic shock. It was a safe haven. But unlike 2011, holdings didn't collapse after that spike. And then, of course, the currency issue. Gold doesn't have to outperform stocks or crypto, it just has to hold its value. Currencies, they lose their purchasing power, meaning they buy less, so the relative price of gold goes up. Now, from that perspective, it's just math, but if you look at the US dollar, we know it's being debased, we know it's losing value, but if we only used inflation as our gauge, that alone would push gold up annually at a pretty steady clip, even if nothing else changes, but things are changing. QE, stimulus, exploding money supply, all of this is helping push gold to that 28% year-over-year run. So where it goes from here, well, it doesn't lose 60% of its value. This isn't 1980. We didn't get here through a one-day panic spike. We built this over years. Central banks loading up, investors holding, currencies falling. Those kinds of drivers, they don't just disappear overnight. Could we see a pullback? Well, sure, but not a crash to half its level. Not unless the world suddenly does a 180 on dollar confidence. And let's be honest, it's not happening. As far as it making that 20x moonshot, though, from some kind of gold revaluation, that's not happening either, at least not without some kind of crisis so big that you'd have much bigger problems than just figuring out how to sell that gold. More likely, yeah, the boring $3,600 predictions over the next few months that the big bank analysts have been giving. And if that sounds underwhelming, well, just remember, we're sitting above the 1980s real all-time high, and we're calling it normal. So let's call it good there. Let us know what you think about today's inflation-adjusted price for gold finally becoming the real all-time high for gold. That's with no single-day spike in price, no double-digit inflation, at least not reported, and no rationing for gas for your 78 Chevy Capri. Just a good old-fashioned price rally. Let us know what you think, though. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you want to hear more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.